Spring has sprung here in Louisville, and that means buyers are coming out and raising their hand and saying, what would it take for us to be able to buy a home? So today, I kind of wanted to talk about the out-of-pocket expenses that you're looking at as a buyer in the market today. Recognize that the numbers that we're going to talk about here today are relative to sort of this middle part of the country. First and foremost, when you make an offer on a property, you are going to be required to include what is called an Earnest Money Deposit, an EMD, you might see. The EMD is a deposit that accompanies your contract. You don't pay that deposit until the seller agrees to your terms and the contract is fully signed by all parties. In our region, that tends to be about 1% of the property's purchase price. So if you're buying a $300,000 home, that earnest money deposit is probably going to be about $3,000, give or take. The amount of that deposit is going to be in direct relation to how competitive you want your offer to be. In a less competitive situation, you could probably make a deposit that's less than 1%. But in a situation where you are competing with other buyers for the same house, you might need to be a little bit more competitive and do a higher earnest money deposit. That deposit is held in Kentucky typically by a real estate brokerage, but also maybe by a title company. It is held in escrow, and that money just protects you as the buyer and your interest in the property as you move through the contingencies of the contract. That money, ultimately, for most people, it's going to come back to you at the closing table. You're going to get that deposit back as part of your down payment and your closing cost expenses. So if you make a $3,000 deposit, you're going to get a $3,000 credit at the closing table. Now, that money also, though, is there to protect you as the buyer. And if for some reason, during the escrow period, during your time to review the property and release contingencies, you could ultimately get that money back if you needed to. For example, if you have a home inspection and you decide the property isn't going to work for you during that inspection process, then you would very likely get that deposit back. The same would be true if you're working your way through the process of closing on this house and suddenly lost your job and no longer qualify for the loan. That deposit would very likely be returned to you in that scenario as well. So it's very protected, but it just keeps all parties on the same page moving forward together, which is why it can't be an insignificant amount of money. It needs to be a substantial consideration so that all parties feel like we're all in this together. The second upfront cost that you're going to be facing is very likely going to be the cost of the home inspection itself. Now, I tell my buyers, this is something unlike the deposit that you probably are not going to be able to get returned to you under any circumstances, because this is the fee that you actually pay the home inspector for their time that they spend inspecting the property. It takes them hours to do that inspection, and then they will provide you with a report that has photos and details about the condition of the property. And so you are literally just paying for their inspection, their time, and that report that comes to you. In our market, I have seen inspections vary drastically. You can find a relatively inexpensive inspection for maybe $400 to $500. That inspection might be less thorough than, say, an inspection that costs you more like $800. There's a big variety, and it kind of depends on how many things you need to have inspected in the home. They're going to offer you things like a radon inspection for an extra fee, a sewer inspection for an extra fee. There are some things that you can add on, and you need to talk with your realtor about what all you probably need to have inspected. Also, there's, very likely going to be a termite inspection on the property. All of these things are, smaller amounts that can cumulatively add up to, like I said, it could be $800 that you spend on your inspection process. This is your opportunity for due diligence on the property. This is your window to decide that you are comfortable moving forward with the house, or to be able to ask the seller to address things that make you uncomfortable. So you only have this window. You can do inspections, of course, for all of the lifetime that you own the home, but this is your only opportunity to do an inspection and be able to terminate your contract or be able to ask that seller to address some of those concerns. So I often say it's really money well spent, even if it ultimately means that you have to walk away from that property having spent $600 or $700 to find out that a property is not where you want to be is a lot less money than going ahead and moving forward with a property that ultimately could cost you thousands in repairs down the line. The third and final sort of upfront expense that I bring to my buyers' attention is that appraisal. Now, for my buyers, we typically do them in this order. We have them send the deposit right away when we're under contract. Then we have them pay for the home inspection, which again, $600-800. And then after we know that the home inspection contingency is closed and we are absolutely definitely moving forward with the house, then and only then do we spend the money on an appraisal. Your lender is going to collect that money and they're going to order the appraisal, and that money is not refundable. Typically what I'm seeing in our market these days is that an appraisal is going to cost you between $500 and $600, give or take. And again, that is cash out of your pocket. There are lenders and there are circumstances that I have seen that will allow buyers to pay that as part of their closing costs. By and large, what I see is that that is collected in order to send the appraiser to the house, because again, that is a direct fee for that person's time and the report that they are issuing, so they get paid in advance. So again, just to recap, the 3 upfront costs that you are going to pay after you get a home under contract is you're going to pay the earnest money deposit of approximately 1% of the home's purchase price. You're going to pay the home inspector to do their job to inspect the property and provide you with a detailed report. And third, you're going to pay the appraiser to visit the property, determine its value, and send you a detailed report about the home's value. Those are the 3 costs that you can be prepared to put up front before we get to the closing table. All of the other fees and costs affiliated with purchasing your home are going to be due at the closing table itself. That would be your down payment, any of the lender's closing costs, the title company's closing costs, and the real estate closing costs. Those fees are all going to be due at the closing table and are probably more of what you've been saving up for. But these 3 initial fees are just the process to get us there. If you have questions or would like specific information for your scenario, we are always more than happy to do a buyer consultation with you. You can reach out to us directly at symphonyrealtygroup@gmail.com.